Hopefully everyone is having a good week. This week is, I would say, somewhat busy. We've just had some release. Let me just, up there we go. Now it's sharing. Yeah, perfect. So we've had some recent releases for unemployment rate on United Kingdom. We've seen a pretty strong reaction on the pound. It was much better than what was expected, and most importantly, it was much better than the previous. So that means that it's better than the last two releases. All right. So if we look here, let me get my pen. If we look here, this is the previous section. Okay, and we can see that the previous was 4.4% unemployment. To be honest, I do consider these 4.4% a higher percentage unemployed. All right, because when we take, let's do a simple maths here. So let's have a look. Oopsie. Population on UK. So they have 66, let's say 67 million. All right. So 67 million. 67 million people all around UK. So 67 million. 4 point, how much was that? 4.5. Well, let's calculate 4.2%. Let's calculate 4.2%. 0.24. So that's 2,814,000 people unemployed. So when we put in perspective, 4% seems a small number. Well, it is, as we have infinity, we can count from 0 to whatever number you can possibly imagine. 1 zillion, 2 trillions, 600 million, 400,000, 50 .001. So you can count whatever you want. So when we put in perspective, 2 million against 67 million people, that's quite a large number, isn't it? So 67 million there. So 2.814 million of people unemployed. So now we can see that this is actually a pretty large number of unemployment people. But still, they did have a good progress. All right. So from 4.4% on the previous month, this is for the month of June. Sorry. So from the previous month, they had 4.4. The forecast, the consensus of the market was expected at 4.5%, and the actual came in at 4.2. So pretty good job. Well done for UK. And we can see this right here for GBP USD, that the fundamental always make its way. All right. So the time of the release was 4 p.m., 1 hour ago. And we can see here that this is the 4 p.m. candle. Let's put in 50-minute. So in a 50-minute candle, we have, we have from 127, let's say 127,800, just to make our maths easier. 127,800 all the way up to 128. So pretty much 40 pips. So 40 pips move. Pretty good move. You can definitely capitalize on those type of moves. But still, if we look at if we zoom out a little bit, if we zoom in, this is a good picture. We can see that the market is grinding higher and higher, just broke another top, right? Let me do my drawings here. So I'm talking about GBP USD here. So it just broke another top at the 27,940, and then previously had broke a top as well, came back for pullback, and it's going higher. Pretty cool, right? We have a uptrend market. So it sounds pretty good. It sounds pretty good for us to entering on long positions, especially after this really good release from the data, unemployment data. But if we zoom out, let's say for a 4-hour chart, we can see that the things are not too great for the pound in the past couple of weeks. So since the 17th of July, so pretty much a month ago, let's say it's a month ago, pretty much. So 4 weeks ago, three weeks and a half ago, we were trading on the pound on 1.3400. All right, so pretty high prices, I would say, for the pound. As we can see, for the whole year of 2024, we didn't had any touch on that level except for the 17th of July. And just as we touch on the 130 level, the market did actually perform well above the 130, but a few days later on, we already could see the trend changing itself and hitting the target I've mentioned of the 126,800. So if you're not on the webinars, you missed this trade. It was a pretty good trade. We've seen the market coming down somewhere around here, and then we had the NFP on the 2nd of August, and the market dropped until the target of 126,800. So pretty interesting trade there. I can do a breakdown if you guys would like so. But yeah, so my expectations for the pound right now is continuation to downtrend, but let me open the chat here because I don't know if anyone is talking anything. So perfect. So my expectations for the pound is a continuation of downtrend. But that doesn't mean that it will happen now in like a few hours or this week or next week. But I was studying some topics around the Fed decision, right? And this is one of the big things I want to talk to everyone today is the Fed decision of cutting interest rates on next month. And the market seems pretty happy, I would suggest. Pretty happy around those headlines of the Fed cutting 25 basis points. But what makes me more intriguing myself is, if you haven't watched my video on YouTube yesterday, is that they're not looking to cut 25 basis point anymore. They're looking to cut 50 basis point now. And that seems a little bit of a stretch, at least in my models, it seems a little bit of a stretch. Yes, we did have a very bad reading of unemployment, a very bad reading of NFP as well. The CPI is coming lower, but I just don't think that is the time for the Fed to cut 50 basis points. I think if they do these, they're calling a little bit too premature, and that can occasionate even more spiral credit for the economy. And if that, if they actually go ahead and do this, yes, this will have a catastrophe effect on the US dollar. But it's a 50-50 argument. 50% of the market is expecting a 50 basis point cut, and another 50, and the remaining 50 is expecting 25 basis point cut. So pretty interesting story. And I want to hear from you guys, actually. What do you think that the Fed will possibly do in the next month? FOMC meeting, that's going to be on September 18, if I'm not too wrong. Let's have a look now. So I use this tool called the CME Fed Watch tool. It's a public tool. It's a, I can share the link here on the chat just a second, so everyone can have a look on that. But okay, so yeah, 18th of September, I was right. And don't forget there, but on the 5th of November, we'll have the elections of the USA. So the result will be published on the 5th of November. And then just 2 days later, we're going to have the Fed meeting on the 7th of November. Right. So first thing first here, we can see that the current target rate is at 525, 550. Right, as everyone knows or should know. And the expectations, the probability for the 18th of September 2024, the Fed meeting, is right now on the 13th of August 2024 at 5:18 p.m. in Australia, is 42.5% of a cut of 25 basis points and 47.5% of a cut of 50 basis points. Tools say that they should turn off the money printer first. I completely agree with you, and that's a funny answer actually. You know, they've reduced the quantitative easing, but they are not yet quite well done on the quantitative tightening. So most probably they will suffer for sticky inflation, as you know, some economists say around the US. All right, coming back here to the economic calendar, I will touch base more in depth later on today. But looking ahead, Wednesday CPI may show their hand. Yes, that's correct. Let me just have a sip of water, guys. All right, so moving ahead, we have in 1 hour and a half, German Economic Sentiment Index, the ZU. And then we have PPI month over month, July for USA. All right, the US dollar. So expect some movements on euro dollar, USD CAD, Aussie dollar, and everything that moves with the US dollar, and anything that moves with euro as well at 7 p.m. And at 10:30 p.m. we have the PPI, Producer Price Index. So if you missed last Thursday, I've explained why PPI is so important, as well as the CPI. So the CPI, all right, let's put it in context, right? So everyone here needs at least some, in essence, right? At least some similar or same products to live, right? To have an everyday life. You need water, you need rice, or maybe pasta. Maybe sometimes you don't eat meat, but you need some vegetables, or you need meat, and so on. So the CPI pretty much measures the basket of goods, okay? So CPI Consumer Price Index, and it's measured through a basket of goods. And this basket of goods is it's defined by the BLS, the Bureau of Labor Statistics on the US. And then we have the Australian Labor Statistics as well, ALS. It's a confusion. I don't know too much about that, but they are the ones that make the maths behind it, and send these to the central bank. So central bank will evaluate with the CPI and the core CPI. CPI does involve and is included the electricity prices, as well as any other thing that it's not controlled by the central bank. The core CPI is the one that they have most attention. It's because they have control over it, and therefore it's much more a clean reading, as I could say. It's a clean reading. The core CPI is much more clean reading than the actual only CPI. Okay, so just a simple and very plain example here. If we have CPI and core CPI coming in much higher than expected, let's say the forecast is 2 for all of the fours, you know, year over year. Usually when we have the release for the CPI, is followed by the year over year and the month over month, or the quarter over quarter year, or the month over month, quarter over quarter. All right. So usually these are the releases that we have from the CPI. So, you know, just a plain example. Someone's trying to draw on my screen. That's a pretty cool drawing. But all right. So, you know, as I was saying, so a pretty plain example here would be if we have all of the 4 readings, the year over year, the month over month, the core CPI year over year, and the core CPI month over month, all of the 4 readings higher than expected, higher than the forecast. This is going to be a pretty huge impact on the market, all right? Because not only the core CPI, but yes, not only the CPI, but yes, the core CPI came in higher than expected because prices of energy and vehicles are going high. So if we have all of the 4 coming lower than expected, then yes, this would be a negative impact on the currency. Usually let's take here US dollar as an example. Usually when we have a higher reading, the market goes bullish, and when we have a low reading, the market goes bearish. Now, what I've just explained to you is for the consumer side. Right, so I think everyone got it. So let's move it on to the PPI, the producer price index. So the producer is exactly the same thing. It just changes one letter. From the CPI, we have the PPI. So the CPI is the consumer and the PPI is the producer. All right. So the producer is exactly the same maths behind it, but except they're not buying milk or they're not buying bread or anything like as we do in tickets or blah, blah, blah. They're buying raw material to produce products for the consumers, for the end, for the end of the line, for the consumers to buy. Me, you know, everyone on your family. Let's say anything on my desk here, I can show to you. Let's say this highlighter, all right? So this green highlighter here, this is a plastic highlighter. Oh, that's a it's a good highlighter. So that's a plastic highlighter, and then we have the paint, and then we have this soft thing that I don't know what it is, and then the engravings. So all of these has a cost involved, right? No one is, nothing is free on the world, right? Even if someone gives you a gift, it's not free because they had to pay for that. So this highlighter will have a cost, a production cost, and it's going to go for you for another price. So let's say the production cost is $1, maybe sometimes even less, 50 cents, and they're selling for you over, I don't know, the branding and everything, $3, all right? So there's a lot of things involved on making a price to final consumers. It's not only, oh yeah, I think $3 it's a fair value, let's charge $3. No, there is a lot of process, like inflation, and that's why the PPI measure it. So if the PPI is higher, why would they charge lower prices on something, on product, on this product, right? If last year, or let's say in 2018, right? Let's say any year that was prior COVID, this highlighter may cost them 25 cents to make it. And now it's costing 50. So it's double the price. Okay, it's only 25 cents, Luca. Yes, it's only 25 cents for one, but they are producing on a massive scale, all right? They're not producing for me only. They're producing for you. And probably this highlighter goes outside of Australia as well, all right? So it's going to probably go to Europe, China, whatever, USA. And so they have to produce a massive, because the demand is higher, all right? So this 25 cents becomes 2 million. And if the 2 million was, if it was 2 million in 2020, whatever, 2018, now it's 4 million. Right? So yes, inflation is tricky point when it comes to a production eyes, I would say, right? Everyone following? Good morning, Suleiman, how are you doing? Okay, sorry, good morning. Where are you from? Good morning. Right now it's 4:30 p.m. here in Sydney, and it's a pretty cold day, I would say. Anyways, so moving on. So the producer price index will show to us if the CPI is actually real reading, okay? So everything on economy has a link. Economy works, if you have been following me for a while, you know that I've always been saying that the economy it has to be, right? It's not it has to be all working together. If one piece is slower than the other, or if one piece is faster than the other, then we have a problem. And in maybe a week or so, this problem will become a massive problem if not solved quickly enough. So if we see the PPI month over month coming higher than expected, we can already think about it that, okay, the month of July, we did have a higher producer price index. What will we have tomorrow on Wednesday? We're going to have the inflation rate, the CPI, Okay, inflation rate is the same thing as the CPI, the Consumer Price Index. It can go from month over month, as I just explained it. It's all here. All right, let me grab my pen and take this drawing off. Perfect. Not a problem. Okay, I know that sometimes you're maybe on the computer or maybe on the mobile, and then you do some scratches. It's fine. All right, don't worry. It's all good, guys. I'm not stressed about that. Okay. So on Wednesday, we're gonna have on tomorrow, pretty much, we're gonna have here, all right, these four combinations that I've just explained to you. So we have the year over year, the month over month, and then we have for both of them CPI and core CPI. All right. So as we can see, the core CPI here, and then we can see the normal inflation rate here. Okay. So so coming back to the thinking here, if we have a higher PPI, a higher reading on the PPI for the month of July, what is expected to happen on the CPI as well? Remember the example I gave on the pen. If the pen costed someone to do a 25 cents and now it's costing 50, there is 100% increase. You know, this is just an example. It's not a real example because 100% is too much. But let's say from 25 to 27, we have a 0.01%. But still, it's something that will affect on a larger scale. But if we had an increase on the PPI on the producer, do you think that they will take this on their chest and they will be like, yeah, I pay for the inflation, not a problem. I don't, poor consumer, let the consumer pay whatever they were paying 5 years ago, not a problem. No, that doesn't help. All right, that doesn't happen like that. So yes, they will charge for the end of the consumer line. Okay, and that's me and you. So therefore, if this PPI comes higher, most probably the CPI will come high as well. All right, this is just one of the models I use to predict the CPI, but it's not 100%. All right, don't take this as a rule of thumb, but 66 to 70% of the time, this is what actually happens. All right. So everyone good on that? Can I move on? Or any questions regarding the PPI and the CPI for for USA tomorrow? No questions? All right. Let's move on. Thursday, the webinar day. We're going to have another webinar on Thursday. All right. So make sure for you to be here. Thursday, we will have Mohammed. Yes, I will do an analysis on Euro, but first I'm just going through all the impactful data points that we're going to have during the week. So it makes sense to us, afterwards to go and analyze the pairs. But I will definitely go to Euro, US dollar, Canadian dollar, Australian dollar, everything, gold and bonds and equities and everything. So Thursday, we're going to have Japan GDP growth rate quarter over quarter and China retail sales as well. Most importantly is for us to look at the GDP, the United Kingdom GDP. All right, so that's going to be at 4 p.m. And then later on, we're going to have retail sales. Now, let me touch base on the retail sales here as well. So retail sales is another very important point for the economy. Does anyone knows why this is important, or anyone have heard about why the retail sales is an important aspect on the economy? No? All right, not a problem. So how does inflation happens? It's through spending. All right, it's through the consumer spending. So this is the reason why the central bank hikes the interest rates, right? If the inflation continues to go higher, the central bank will come and intervene in one of the ways to hike the interest rates. Sorry guys, just a second. All right. So the retail sales it's pretty much, it's important because it shows how much consumers are spending. That's correct. So the retail sales will show us how much the consumer is spending. If we have a higher retail sales, I'm not talking about a higher than expected. I'm talking about, let's say, if the expected right now is 0.3%, as we can see, and the previous was 0%, so pretty much no sales. But if the retail sales coming in for the month of July at 0.7%, then okay, wait a minute, we most probably will have an increase on the inflation. All right, and the central bank will have to be a little bit more of a hawkish approach towards the interest rates. But I don't think this will be the case for the month of July, because we did have quite a stressful month over the economy everywhere around the world, even in Europe, even in USA, Australia, Canada, and so on. It has happened so much things over the economy on the last couple of weeks. Biden got in, trying to assassinate it. We have, Trump got assassination attempt. Biden got throwing the tower, and then, yeah, lots of things happening. So I don't think this will be the case. But this is how we measure if inflation can go above or below what is actually expected. So can you now put all together and make this make sense for you and see that actually, yes, the inflation and the PPI and consumer and the retail sales, everything works together for the economy to go on the way as it's going. Later on Friday, we're going to have retail sales again for UK and building permits, preliminary building permits on July from USA. And then we have consumer sentiment, preliminary consumer sentiment on Saturday for me, because it's midnight, but probably on Friday for you guys. All right. Any questions regarding economic calendar, or can we move on to the charts? All right, no questions. If you have questions, please just send it through, and we'll move on to the charts now. But right, looking at all of these, as we just had, what are the expectations we have for the coming week? Okay, expectations. So my expectations is that, yes, we have a stronger euro. Okay, euro goes up. The US dollar, most probably we will continue to see a weaker point to the US dollar. Okay. Australian dollar will be somewhat flat. Right? Japanese yen, we don't have much data pointing to the Japanese yen. And another thing is, trading Japanese yen at this moment of the market, it's a very I would say, knowing how to use risk management is a pretty good tool for JPY risk management. But what I would be trading this week, oh yeah, of course, the pound. I forgot the pound. We can see the pound a little bit stronger this week as well. As we had yesterday, sorry, not yesterday, as we just had at 4 p.m., the unemployment rate at 4.2% from the previous 4.4%, and the forecast of 4.5%. So 0.3% lower than expected. So from this little table here, I've just built it up now. We can see that the euro could go up, the US dollar could go down, Australian dollar may be flat, Japanese yen. I won't be looking to trade Japanese yen just because of the risk and the volatility is too high at this moment. And of course, there is, there's always opportunities around those pairs. It's just because my type of trading doesn't go in too much of the risk side. And then we have the GBP could go up as well. So let's blend all this together and let's go to the charts now. Let me delete all. Perfect. All right. Let me start with euro dollar. Hopefully my analysis is here from last week. No, it's not. All right, that's not a problem. So last week I've discussed about the euro-dollar potential move down. All right, this move here, and this wick here that we just left was my trigger point for a long position, and my take profit is at 109,550, around somewhere around here. And the reason is, okay, so let's go for take this off, get my Fibonacci too. Sorry. So if we zoom out here, we can see that from beginning of this year, January, all the way now, if we get and measure how much we've moved from beginning of the year, from the open of 1st of January 2024 to right now, 13th of August 2024, we haven't moved much. All right. So this is the opening of the year. Right there. And the dot line on the green line here, on the green dot line, is the pricing right now. So we've only moved somewhere around, what was the price here? 1032. So we've moved around 1,000 points, 100 pips, right? For the whole year, for 8 months, right? Since beginning of 2024. So what I want to say with this is we are on a consolidation, right? We are on a consolidation phase. So if we get from beginning of the year to right now, this is somewhere the consolidation that we are on. There is 2 options for the euro right now, and it's a pretty tricky options. First, euro becomes stronger with the cut from the Fed, right? And my expectations are, yes, a cut will happen, but I'm not too sure about the 50 basis point cut. I do think that this is a bit too much for what they are at this stage of the economy. You know, if we look at the inflation from US, yes, they're doing a fantastic job. They've tried as any other central bank around the world right now, any G8, G10, G20, any G5, G6, whatever group, they've tried hard to bring inflation down, and yes, congratulations, they could bring inflation down, but it's not yet on the target. So in my opinion, they could continue to cut. Well, they could cut a 50 basis point when they are confident that yes, inflation is on target, and from now on we having inflation under control, and therefore nothing will change our vision towards cutting 50 basis points. If they do cut 50 basis points, I do think, as I was just talking to Barry just a few minutes before we start the webinar, I think I don't know if I can say it's a bit too dumb. It's a bit dumb to have done such a good work until from last year to until last month. That was the last meeting of the FOMC, of the Fed. That it doesn't sound appetite, right? What are the causes that could happen if they cut 50 basis points? First, we need to remember two things, all right? Beginning of 2024, ending 2020, and then ending 2023 on December to beginning of 2024. Most of the specialists around the world were expecting 7 basis point cut from the Fed in 2024. Arguably, this was a huge amount of basis point cut. If we do, let's say 25, if we do 25 basis point cut, we're talking about 175 basis point cut. This is 1.75% cut in only 1 year, right? So from 5.25, 5.50, that where they were, where they are actually, in the target range, they would go down all the way to 4.75, around that number. So it doesn't appetite me, all right? But inflation were too high. Inflation were much higher than the as it is right now. And now that inflation is coming lower and that the rates are actually making sense, and as I've mentioned on last Thursday as well, inflation has some progress towards, inflation looks like that. All right. So here is the peak of the inflation. Peak. Oh, that doesn't look too good. Do like that. Oh yeah, that's better. Peak of the consumer price index, the inflation. And the Fed will only, or whatever, the central bank will only start to hike in interest rates halfway there. All right. And once we have the peak, then they will be somewhere around here. So they're always behind inflation, right? Because the inflation reading is always later after they meeting. All right. So every time they have a meeting, later on they have inflation, and they use these unupdated data to make the next month decision, and it goes from that. So it's pretty interesting how still working 100 years over the same thing, we're still working on, it's such a different word right now. Anyways, so inflation starts to decrease. Once inflation hits halfway there, this is where we know that all of the remaining that we had on inflation up before the central bank start hiking halfway, as I just mentioned, it's all a belly fat, sort of a belly fat. You still have that six pack, but still have the belly fat. So you can't actually see it. But once the inflation starts to decrease, things start to settle down, then we can see the rates making sense on the economy. And that's exactly what is happening now. So as I just mentioned, if they cut 50 basis point, it's a bit too much. If they cut 25, I think it's on the point, it's on the dot, nothing more, nothing less. I think the 25 basis point cut is the thing to happen. All right. So first option, if the Fed cuts 25 basis point, right? 25 basis point cut. What will happen with the US dollar? The US dollar will go down, okay? And therefore, most of the market participants will perceive that, wait a minute, last month was a terrible NFP, unemployment rate still high, average hourly earnings is decreasing, and they're going to start to, everything makes sense now. So if the Fed cuts 25 basis points, they will be like, oopsie, they are a little bit too desperate. Sorry, they're a little bit too desperate. So US dollar, no one will want to buy from US dollar. And what's most interesting about this is the BOPs, the balance of payment. No one talks about that. I haven't seen no one talking about BOP. Does anyone know what's the balance of payment here? Just want to give a sip of my water again. Okay. Seems like no one ever heard about BOP. Okay. It's pretty simple, right? There's nothing too crazy on economy has to be maintained as simple as possible. That's correct, Steve. Imports and exports. Balance of payment, it's pretty much, let's say, I'm on Australia, you guys are on Europe. I want to buy something from you. Therefore, I'm going to buy euros to buy from you, right? Or if you want to buy something from me, you have to buy Australian dollars so you can buy my product. And that happens with countries, all right? So countries, it's like a B2B transaction. Let's say Australia wants to buy from US. Therefore, Australia will have to buy US dollars, and then we'll buy the product. If the US wants to buy from Australia, USA will have to buy Australian dollars and buy the product. someone sent a very interesting question. So Tal sent a question. So why cut so aggressively if it will weaken the dollar dramatically? That's a fantastic question. I will get that back to you in a minute. Just finishing my my thinking line here. So what happens with the BOP is if the US dollar is if the investors, if the market participants see the US dollar a bit weaker, no one will want to buy US dollar on an actual market, all right? But everyone will try to buy now products from US. Why? Because it's much cheaper for them to buy products from US because US dollar is going down. So USA will lose the BOP from other countries. So if they were selling a million, just say a random number here, if they were selling a million, now they were selling 700,000. So they lost 300,000 on revenue generation. All right. So this is why it's not good for the country having a weaker currency. If they have a strong currency and they know they have something that no one has around the globe. So let's say Brazil. I'm from Brazil. I'm a Brazilian. We do 56 or 60% of coffee exportation around the world. And I'm quite sure we do 90% of acai, all right? So if you haven't yet tried acai from Brazil, from Amazonas, have a try. It's fantastically good. We have 90% of the product, so we can put the price we want, and you guys will have to pay for that, right? I'm not mean you guys, the countries that we want to buy. So pretty interesting how VOP works, right? Balance of payment. So it will dictate if you are a strong currency, you're a strong country. If you're a weaker currency, like everyone will wants to use you. And so on. Tal just say, be careful. Acai is very addictive. Yeah. Acai is very addictive. I actually just talked about it. My mouth starts to salivate. It's really good. Especially, it doesn't matter, right? If it's cold, if it's winter, if it's summer, if it's hot, whatever. It's so cool. Right. So this is the first thing. US dollar will go down. And the second thing is that investors will be shopping around on the market to look for a stronger currency. And which one is strong at this moment? Of course, the Japanese yen and the euro and the pound. So those three currencies will benefit in a sense of making bullish moves on the market after we have a weaker US dollar. All right. So therefore, we can see happening somewhere around these moves and breaking this consolidation. And if we break this consolidation, we can go to 111 pretty easy. All right. Sorry, my rhinitis is attacking me. So, but this is one trade. All right. This is one trade because what can possibly happen is the Fed goes and give us the second option is the Fed goes, give us a 25 basis point cut, but on a hawkish market, on a hawkish stance, and therefore the market can drop all the way back down to the support of this consolidation. All right. My short-term trading expectations for the euro dollar. Let's have a look. Let me take this blue box off. So as I mentioned it, okay, I think I'm gonna have to do like that. So as I've mentioned it, I have a long position somewhere around this level. So from here to here, let me delete some of the lines because it's too much things here. Background. I don't need these. I don't need these. I don't need the 23. Perfect. Save. So 50% of the retracement, I thought would be a fair value, to buy some euros against the US dollars. And I do believe that we can carry this trade until the 150, 550. All right, so my target is at this level here, 155.50. There we go. So this is my target, and the reason because is this box here. So if you don't know, this is how I place my targets, and the market always tends to come back to those boxes, all right? As we just had a box here, sort of the consolidation, the market breakthrough and comes back there, and then we had another one here and another one here. So it cleaned it up here, the first one, the second one, and the third one. And that's exactly what happened, and that's exactly what I think it will happen with this one. And if nothing different, okay? Now, we don't have much time. Sorry, I got a little bit excited here, so I'm going to answer Tao question. Sorry for my pronunciation. So, Tao, sorry guys. So why you can't? So someone asked it here. So why cut so aggressively if it will weaken the dollar dramatically? It's not about weakening the dollar. They unfortunately, they can't think about only the US dollar. They have to think about the millions and millions of population they have around the globe and around the US nation when they're taking those steps, because they might. Higher rates are not good at all for consumers, for normal consumers like me and you. So, higher rates will impact on mortgage prices, will impact on how much you have to pay back to your bank, right? Loans and whatever. We will impact a lot as well on everyday products that you use. So they have to take in consideration the poor families that, you know, supporting the family and moving on as a normal family. Majority of the families do have mortgages, you know, do have loans. Some of you may be adults here and know what I'm talking about. You have to pay $4,000, $6,000, $8,000 a month, and $2,000 is the rates, right? So pretty tricky. It's not about caring if the US dollar will be strong or not, or weaker. They have to do their will too, and this is how the economy works. Guys, thank you so much for another webinar. Hopefully everyone could have had a good time. Be careful again, this week will be a bit crazy around the CPIs and the GDPs. But I wish everyone a good trading ahead. And I see you all on Thursday, right? Guys, just making sure here, Thursday, we may change the time, right? We may do a little bit sooner this Thursday and from onwards. De nada at all. So I will let everyone know on the Telegram as well. All right. Guys, thank you so much. Have a great week ahead, and I'll catch up with you all on the YouTube videos or in the next Thursday webinar. See you guys. Bye-bye.